Morning, everyone. Welcome to our Phillip Securities Research Morning Call. For today, we have a few stock counter updates, results, and Phillip on the ground on Tesla, Intel, Nanofilm, Zixin, Keppel, as well as the many REITs, and technical analysis, as well as our usual macro and sector outlook on the Singapore REITs Monthly and the Singapore Weekly. So this is our usual disclaimer. The information provided is solely for educational purposes and should not be considered as financial advice. So I'll hand over time to Iqbal to get us started on Tesla. Yeah, thank you.
Test, can you hear me?
Yes, we can hear you. Yeah, sorry, I think he's having some issues. I think we'll uh let Hashim start with things.
Can we just get Serena to do it first? What's Hashim doing?
Hi, good morning, everyone. So sorry about the technical issue. I'll go first. I will provide some updates on Zixin. Next slide, please. So, firstly, for the fresh sweet potato segment, we do expect around like 28% year-on-year growth in fresh sweet potato harvest in financial year 26. In order to have a better profitability. This is supported by two reasons. The first one is because there is a better weather condition, and because between late August to early February, it is actually a peak harvesting window. So for higher yield, it actually benefits Zixin in this fresh sweet potato segment because they don't really have to buy that much of sweet potato from the external farmers, which can be quite expensive, and therefore hurting some of the margin. And because the supply continue to normalize, we also see the sweet potato prices continue to moderate, so that even if Zixin still have to buy some sweet potato from the external farmers, I mean the cost of raw material will be gradually be reduced. And for the animal feed segment, the company announced that they renew a contract with the company. They double the volume compared to the previous order, but this order was actually start 19 March this year. Therefore, we expect the revenue contribution to material in financial year 27. And as for the processed sweet potato segment, we think that it remains a key PATMI drivers. This is supported by they continue to have more different types of sweet potato snacks and also a high value functional products such as like sweet potato powder. We think this kind of functional products has actually potential to extend it to health supplement and also cosmetic sector. And since this kind of ingredients, because they contain a very high nutrition value, it could actually command a higher premium pricing in this health supplement and also cosmetic segment, so that we think it could become a meaningful revenue contribution as Zixin continue to scale the capacity, because currently they can only produce 5 tons a day, so that the order will be now relatively small, and most of them are actually with bakeries or like noodle manufacturer. And the company also have regional extension plan. So Zixin sweet potato chips is now available to purchase in Singapore, and soon in May, even like premium fresh sweet potato varieties will be available in the store. I mean, in Singapore stores as well. So we think that it will boost consumer adoption and also brand recognition. But we still think the key performance indicator will still be focusing on China domestic markets. Yeah. As for the Hainan project, we continue to think that it serves as a medium-term growth catalyst for Zixin because the location offers a planning area is 5 times bigger than Liancheng, and Hainan could actually support 2 harvests compared to Liancheng's once. Therefore, we expect a total fresh sweet potato output to double once it became fully commercialized. It will provide we think that it will provide more upside for Zixin mainly by 2 reasons. The first one that it will boost the supply so that they can secure more internal supply in order to stay and at the same time also stabilize the raw material prices and also like mitigate the margin fluctuation. And the second one will be the increasing because there are more planting area, so they can actually increase the production of premium sweet potato varieties, which currently still have a very robust market demand. So that's why for Zixin, we maintain a buy recommendation. We with no change of financial year 26 forecast, and we also didn't change our target price at 5.5 cents. We think that the fundamentals remains intact with the stabilizing supply and prices of fresh sweet potato. And the second one will be the product diversification in high margin processed product. And also the third one, there will be very stabilized contribution, volume driven growth in animal feed. And overall, we also maintain our forecast. We estimate a gross margin of 32.5%. We think that this margin performance will be supported by 2 reasons. The first one will be the higher sweet potato output during the peak harvest season. And the second one will be increasing contribution from the higher margin processed product. Yeah. And that's all from me. I'll pass the time to the next presenter. Thanks very much.
Yeah, thanks, Serena. Sorry for the technical difficulties just now. I'll be presenting on Tesla, covering Glenn because he's on a site visit. So it'll be on Tesla's first quarter 2026 results. Yeah, next slide, please. Yeah, so for Tesla, the first quarter results is within Glenn's expectations. There's an increase in adjusted PATMI by it spiked up by 56% year on year because of increase in vehicle deliveries. And there's also higher auto gross margins from because Tesla is able to maintain cost discipline and they are able to lower their average cost per vehicle. Yeah, so in terms of capex wise, Tesla guided FY26 capex to be above $25 billion. So this is above their previous guidance of $20 billion. And this increase in capex is expected to be used to fund Cybercat, Semi, Megapack 3, as well as the in-house A15 chip program, which is the Terafab JV. Yeah, so management did guide that the free cash flow will be negative for the remainder of this year. So in terms of Glenn's thesis, it is unchanged that the auto business is still in a structural decline because Tesla's trailing 12 months vehicle deliveries has been declining. Their China market share has been losing market share in China. The retail share is 5.7%, which is a 28-month low. And so and as for capex wise, because it is still at a very early stage and this significant commitment has yet to deliver a commercially viable autonomous offering. That's why Glenn is still negative on Tesla and maintains a sell call. Yeah, so that's for Tesla. Next slide, please. Yeah, so I'll be covering Phillip on the ground for Intel. They released their first quarter earnings, which drive share price increase across the semiconductor space as well as especially AMD as well as AEM. Yeah, so talking about Intel, their revenue rebounded from the previous quarter. So as you can see from the top row in the table itself, revenue is up 7% year-on-year. This is driven by strong CPU demand from inference and agentic workloads. So as AI workloads shift from training to inference and also agentic, there's a stronger CPU demand. And this is because if I try to give an analogy, the way CPU and GPU works is a bit like how air traffic control towers work with aeroplanes on the ground. So for example, if you think of aeroplanes as GPU itself, there's many different components within an aeroplane that must work parallel to each other. For example, like the engines, the flight controls, pilot, so on and so forth. So this is the high performing segment of that workload itself. But outside, there must be someone controlling different aeroplanes together. The aeroplanes cannot land at the same time, for example. So this is where the CPU comes in. If you think of CPU as the air traffic control tower, it must take in the data when the users query, and then it must send the data out to the GPUs itself, receive a feedback before it can look at the entire system again. So this is also roughly how agentic AI works, because when you query an agent itself, the agent have to take in your query, send the data out to the GPU, and then coordinate among the different GPUs itself. So that's why the entire CPU market has received a surge in demand recently. And yeah, so moving on, for Intel's foundry itself, their 18A is also in full production. And they are also guiding their advanced packaging backlog to increase as well. So there's increased demand in their advanced packaging backlog. So this is mainly referring to their EMIB process, whereby it's competing with TSMC's CoWoS, which is the chip on wafer and substrate. So Intel has a separate technology which is slowly gaining traction as well. As for their CCG segment, which is the client computing group PC segment, the revenue is flat year-on-year because of supply constraints. They are moving more supply to the PC AI segment. Yeah, so in terms of Intel's guidance, they recently announced long-term agreements with Google, NVIDIA, as well as Samba Nova, which is a private startup involved in the custom AI space. And they have also announced a huge partnership with SpaceX, xAI, and Tesla to support the Terafab. So this is a huge commitment. The Terafab can be above $20 to $25 billion. And but right now it's still at a very early stage. There hasn't been any details regarding this deal. Yeah. In terms of Intel's foundry segment, they expect increasing supply from second half, and also expect early design commitments for the next generation 14A to come in at the second half. For overall Intel's guidance on the CCG segment, which is the PC segment, they expect full year PC unit to be down low double digit. So this is because the PC segment is also a very cyclical industry. So this is part of the down cycle. We do think that it will also slightly affect AMD as well. But I think that it's also because Intel has been losing market share to AMD. That's why they also expect this CCG segment to be down. In terms of Intel's capex, they expect capex to be flat year-on-year. They mentioned they will spend less on the core and shell capex, but they will spend more on tools. So we do think that this will benefit equipment makers. So our outlook for Intel is that we do think that there's some catalyst going forward. For example, the partnership with Elon Musk is still very early stage, but when SpaceX IPOs, we do think that this will draw more attention and act as a catalyst for Intel's share price. And we do think that the bigger CPU market demand from agentic AI adoption will offset the softer PC demand for AMD. Yeah, so we do think that the bigger CPU demand will benefit AMD. And yeah, so Intel also mentioned that they expect expansion of back-end advanced process technology in Malaysia, and expect revenue contribution from next year onwards. And we do think that this will benefit AEM, because AEM has a very close partnership with Intel, and AEM also has presence in Malaysia. So we do think that they will be a beneficiary from this. Yeah, so overall, that's our outlook for Intel. Next slide, please. Yeah, so I'll be covering Phillip on the ground for nanofilm as well. Next slide. Yeah, so for nanofilm, we don't cover nanofilm, and first quarter they provided updates with limited financials. If you look at the revenue, it accelerated. Year-on-year revenue is up 24%, as you can see at the bottom row of the table. So this is an acceleration from the previous second half of 13% year-on-year, and it's driven by broad-based demand across the end markets, across consumers as well as industrials. So for consumers, they are producing for a new product, which is the coating for customer A's watch housing. Customer A is also their biggest customer. It is the most popular smartphone brand, and it makes up about 50% of 50+% of nanofilm's revenue. And they are coating for the watch housing for customer A. And apart from that, they're also pivoting to more functional coatings for phones and watches. So we are expecting more NPIs coming up this year. For industrials wise, nanofilm is seeing higher demand for piston ring coatings for car engines, which is the automotive segment. Also higher demand for semiconductor back-end tools, as well as the circuit board PCB drill bits. Because of the increased data center build-up and increase in global semiconductor revenue, nanofilm is seeing this increase in demand for PCB drill bits. Because as the semiconductors circuit boards are being layered on top of each other, they will need the drill bits to drill in the holes in order for the circuits to, they call it vertically interconnect with each other. So that's why nanofilm is seeing this increase in demand for the drill bits. Yeah, and as mentioned earlier, customer A contributes about 50% of 50+% of nanofilm's revenue. The previous update, second half itself, it was about 60%. So this decrease in concentration of customer A, we think is a good sign for nanofilm because it shows broader diversification across other segments. For nanofilm's margins, the AMC margin is about 43 to 46%, and it is the highest since FY 2022. So if we see on the chart at the bottom right-hand corner, nanofilm's gross margins has been stable at about 35 to 37% for the past 3 years. But there has been a spike in gross margins because of a favorable product mix. As they are coating for watch housing with a bigger surface area, management believes that this will increase the gross margins, and this is also reflected in the results as well. And management guided margins to be structurally higher because at the start, the advanced material industrial segments, it has a higher upfront cost. So now nanofilm is transitioning to the second phase of volume manufacturing with lower variable costs. That's why management do see structurally higher margins going forward. In terms of guidance, management expect higher demand across the semiconductor back-end, PCB drill bits, as well as functional coatings, NPI with existing customers, as well as higher demand from hydrogen fuel cell as well as smart eyewear. As for our outlook for nanofilm, we do see potential catalysts from pivot into semiconductor front end with volume manufacturing of wafer lapping carriers from third quarter of this year. So wafer lapping carrier is basically the structure which holds the wafer after the wafers are being printed with the circuit boards. The electrical components onto the wafer. So after at the front end stage, after the patterns are being imprinted, the wafers will go through a polishing stage. So that is where nanofilms coatings come in, whereby they will apply the coating onto the structure holding onto the wafers itself. So this increases durability for the wafer lapping carriers. And we do think that this pivot into the front end will be able to drive is a potential catalyst for its share price. And currently nanofilm trades at a premium to its peers average. We take the peers average as Singapore semiconductor companies, for example, like AEM, Franken, as well as UMS. Yeah. So that's for nanofilm. I'll hand over the time to my other colleagues. Thanks.
Yep. So I'll go through a OUE REIT update. So the title is Hospitality and Office Lead Growth Amid Lower Financing Costs. Next slide. So results-wise, their gross revenue is up about 6+%, and that's because of their strong performance in their hospitality. So for hospitality, revenue and NPI was up close to 15%. And they have two hospitality assets. One is Hilton Orchard, the other is Crown Plaza. Both of them had a RevPAR growth of over 11%. So Hilton Orchard mainly attracts your business travelers. So there was an increase in demand from the corporate accounts for Q1. And for Crown Plaza, it's mainly transient travelers. And the Crown Plaza also benefited from the Disney cruise voyage, where the crew members were housed at Crown Plaza. We expect RevPAR growth to be high single digits for FY26 going forward. Apart from hospitality, their office segment also did quite strongly. They had continued reversions close to 6%. Their occupancy is about 95%. And they have expiring rents, which were signed at $9 plus per square foot. Current signing rents are close to $12. So there's this gap that they're able to capture when they are renewing their leases. And we are expecting for mid to high single digit reversion. One of the more important point for OUE REIT is that their financing costs have fell quite a bit, close to 17%, to 17.2 million. And this was because their cost of debt fell about 50 bips after they paid down one of their highest cost loans, which was close to 100 million. There is some refinancing for 2026. One of the main ones is their $150 million medium-term note. Currently, 3-month SORA has fallen about 140 bips year on year. So we expect there to be some cost savings through the refinancing. Negative, Mandarin Gallery, which is their retail portfolio. It is facing some near-term weakness because their occupancy has fallen close to 2% year on year. And the main tenants affected is the F&B tenants who are facing higher costs. Tenant sales are also below pre-COVID levels, but there are some leases that are expiring, some old leases. For example, Victoria's Secret 10-year lease, which was signed, which is currently below market rent. So when that expires, we expect average rents to go up for Mandarin Gallery once it's backfilled. Outlook-wise, for OUE REIT, they are more or less insulated from the Iran conflict. Even for their hospitality segment, Crown Plaza, there wasn't much difference in their tenant profile. And for majority of their hospitality assets, they are covered by a 5-year utility contract. So the electricity prices are about 20% below market rent. With the exception of Crown Plaza. Crown Plaza, they have a direct contract with Changi Airport. So other than that, we think the Raffles Place divestment will be key for OUE REIT. One of the Salesforce Towers owners, which owns 50%, is Ping An. Ping An previously tried to sell their stake in 2023, less than 1 year after the Salesforce Tower opened, but they were not able to do so. Currently, the market fundamental for the Salesforce Tower or office in Sydney is stronger than in 2023. And Ping An has again put their stake for the 50% from last year, November. So we expect that OUE REIT will likely sell off their stake in One Raffles Place and redeploy the proceeds into acquiring the Ping An stake. And lastly, for Crown Plaza, we do still think it will be prime for sale because the Crown Plaza has a income cliff of 6 to 18 months because refurbishment will take that long, and capex will amount to about 30 million. So with that, we have an unchanged TP by recommendation on OUE REIT, and it has a distribution yield of 6.2%. So next, I'll go through Elite UK REIT titled Gearing Down Valuation Up. Next slide. So for Elite UK REIT, their gross revenue was marginally up, but their adjusted NPI was up 4%. The positives for Elite UK REIT mainly is their capital management. So their net gearing fell close to 4.8 percentage points to 37%. So this is the first time it's in the 30s range. Mainly because of their asset valuation going up. Their borrowing cost is stable at 4.7%, and the lease regear, 70% of DWP leases has de-risked their income profile. So when they're going for refinancing, we expect better financing terms for Elite UK REIT. Second positive is their portfolio valuation. It has increased about 9.1% overall portfolio, and this is largely due to the lease regear. Main changes include Peel Park, which has increased close to 10%, Parklands, as well as Nutwood House. So for Lindsay House, which is a conversion asset, so previously it was owned by a government, now it's converted to become a student accommodation. Its valuation has increased close to 41% since then. We expect similar valuation increase for Cambria House once they obtain a planning consent. And lastly, we expect a NAV uplift through their Peel Park divestment. We have a list of site sales or land sales for data center use in our report, and what we see is that there is a lot of interest from hyperscalers, tech companies that are buying up land and converting them to DC use. What's unique about Peel Park is that they have already obtained that planning consent, and they have also secured the power supply to the grid. So it's a very unique asset, and the demand, we expect it to be strong for the land, because there is a lot of support by the region at Blackpool, where they're trying to build up a digital infrastructure campus, and it has attracted the attention of a lot of data center and digital infrastructure funds there. Outlook wise, we expect the remaining 20% of the 30% of DWP leases to be regeared. There are certain assets that look prime for conversion into a student accommodation. One of them is a Glasgow Benefit Centre. So for this asset specifically, it has dropped about 30% in valuation since December 2024. And it's in close proximity to multiple universities like the University of Glasgow. So we think it would be a good asset for conversion into PBSA. And we think Elite will also benefit from a refinancing. So previously it refinanced in March 2024. And during that time, the rates were close to 5%. Currently rates are close to 3+%. So if they refinance, we do expect some interest savings from that. So we have a buy on them at a TP of 41 cents, and they're trading at a distribution yield of 9%. Next slide. So lastly, I'll go through Keppel REIT, Phillip On The Ground. So gross revenue is up 14% for Keppel REIT. So for some background, Keppel REIT mainly invests in office assets, grade A quality office assets, and they recently ventured into retail. So they bought a Australian shopping mall called Top Right Shopping Centre. So the assets grew from 4 assets to close to 14 assets, and their portfolio is mainly in Singapore, but they also have assets in Australia and to a lesser extent in South Korea and Japan. Apart from their Top Right shopping centre acquisition, they acquired a 1/3 stake in MBFC Tower 3 in December 2025. So tenant profile wise, majority of them in finance, tech, as well as government. So names include DBS, Stanchart, TikTok, EY, as well as some government names from Australia. So outlook wise, our understanding is that they are currently trying to build dry powder and do balance sheet consolidation. Their priority is divestments. So what they want to do is to divest assets, get the dry powder and redeploy into a newer, higher yielding assets. And when you look at the table, 6 divestments in the past few years. All of them are done at a premium, and it's quite a significant margin. So close to high double digit premium divestment. Apart from that, we do continue to expect our office reversion to be strong. For Keppel REIT in specific, their expiring rents are $11 or close to $12, and their signing rents is above $13. So that spread can be obtained by the expiring leases, which is close to 12.2% of our GRI. There's also a limited supply. So the only one that's coming online is a Shaw Tower, which is close to 435,000 square feet. And that's less than half of the 10-year historical demand of over 900,000 square feet. For Keppel REIT, there's a minimal impact from the war. Electricity costs are largely hedged. They have a 2-year contract, fixed price, except for one that's due for renewal in 2026. Yeah, it's currently trading at a price to NAV of 0.72 times. With that, I'll pass on to the next speaker.
Thanks, Hashim. I'll move on to the technicals. Yeah, so first up on the S&P 500, last week you continued the bullish momentum. It was up 0.5% on the week. And I think this week wise, we are still likely to see this momentum continue as the price, there was a breakout of this bullish flat consolidation last week. So the next resistance area is likely to be at 7,220 to 7,320 area, which is 227 to 261% Fibonacci extension levels. And current support is likely to be 7,050 to 7,150, which is the 10 MA level to the horizontal level breakout last Friday. And this table is talking about the Philadelphia Semiconductor Index stocks returns after at least 10 days of consecutive gains. So as you know, the Philadelphia Semiconductor Index has been on a big rally recently. As of Friday, it's up 18 consecutive days with a 47% gain during this period. So this is actually quite rare in the history of stocks. So since the index was created in 1993, there's only been 4 instances where there's at least 10 days of consecutive gains occurring during 2014 to 2017. I put in one data set of last year as well, 2025 September, where it recorded 9 days of consecutive gains since it was quite recent. So looking at the history, usually we tend to see about 8.3% gain when there's such many days of consecutive gains. However, the recent rally has actually very much eclipsed all this with a 47% gain. On average, in terms of the 1 week returns, it's about 4.1% since it starts the rally. 1 month is about 10% on average, stretching to about 32% 1 year later. So it's all quite positive from the 1 week to the 12-month returns following such a rally. What's significant this time is the significant momentum trust that we are seeing for the stocks. So in terms of if you look at the RSI as of Friday, it was 85.1. If you look at the 14-day RSI, and also is currently about 48% above the 200-day average. So this, when it hits 85 in terms of the RSI, is quite significant because this has only occurred 3 other times in history, in 1995, 1998, as well as 2011. And previous times, in terms of the average returns back then, we tend to see a bit of a pullback in the 1 week following once there's such a sharp rally, on averaging a 4.8% pullback. However, it tends to stabilize in the 1 month to 3 month period thereafter, about 8 to 16% return. And the longer term returns from the 6 month to 12 month periods tend to be a bit, tend to diverge a bit. There could be like on average about 1% return on the 6 months time frame, and the 12 month going to the 12-month time frame return, we could see up to 14% drawdown or 96% rally afterwards. So this is given the limited data set that we have looking back in history for the stocks. So that's all from me. I have time to Paul to talk about Keppel. Thanks.
we move on to Keppel released their update. So our title basically means their asset gathering and earnings growth is intact. Asset gathering means their asset management continues to grow, and we think earnings for second half is intact. We'll explain why later. Next slide. So for Keppel, they provide an update, but not much financial highlights. I mean, if you look under the results bullet point, these are what they say: slightly lower profit due to lower real estate, overall profit. So not much in terms of really details, the financials, but in terms of some of the key messages in the briefing is that they do see a recovery in electricity spreads. So electricity spreads is what they no, basically electricity. I mean, they sell electricity, so this is, you call it spark spreads or margins. So since before the war, the margins was coming down around $10, and then now it bounced back up about $20, and recovered by $20. So there was a $30 swing in margins. I think what has happened is, number one, because of the war, uh, prices have gone up, of course, and also electricity prices have gone up, and also the supply of gas has also kind of been kind of a bit curtailed. So that's why, and also because of the war, when they negotiate for longer term contracts, the buyers of electricity are more willing to sign longer term contracts because it become top of mind that there's insecure, or at least there's insecurity in terms of the availability of electricity, at least the mindset of them. So that's why the spreads are better, and this is positive for them and also Semcom Industries. As you recall, during the C-Trim spin-off, Keppel had 4.3 billion of REITs in the balance sheet, which is about roughly around 13 REITs. So this is worth 14 billion. Then with the oil price rebounding, there's a better outlook for the REITs. Mainly number one, because when oil prices rise higher, not just the short term, but the whole curve. Because if you are going to buy REITs or do exploration work, you look at the whole curve. So the long-term curve for oil price is up. So what this means is that there's more demand by investors to invest in these REITs, and when they do renew the REITs, the charter rates will be higher. So of the 13, if I'm not, they have like 6 that is actively deployed. So this is a positive. The negative is there has been a small disruption in the gas. Singapore takes about 20% of gas. I mean, this is what was mentioned. But so far, only one cargo was disrupted. I think for Keppel, their source of gas from Middle East, I think, I don't know, probably it's a low single digit number. They don't officially mention. So the gas disruption is a bit complicated because now the gas will be sourced from the government. So the government will be the central agency that will procure gas. And I think Gasco, they call it, managed to get gas from other countries. I mean, by just paying more. I think, yeah. Then no change in our target price and our buy recommendation. We think second half earnings will be strong because of the 600 megawatt Keppel Sakra the new power plant that's going to be turned on by June, and this will boost their power capacity by 50%. Funds under management, I think in the first quarter they mentioned the asset management fees were up 13%, so this will continue as they grow their assets. And the asset gathering they mentioned has not been affected by the Middle East because the funds that they're building is for data centers, digital infrastructure, and the Middle East hasn't really dented their ability to grow their funds under management. There's a sale of 2 more Bifrost cables and so forth. The monetization, so this is the first time they explicitly mention a target. So they're looking at 2 to 3 billion, somewhat similar to last year. So this was to support special dividends. If you recall, they're going to pay 10-15% of what they sell as special dividends. So you're talking about maybe 200 to 300 million or more in terms of special dividends. The Middle East conflict has actually kind of helped them in a way because it lifted the electricity margins and also improved the RECO. The one overhang for them has been M1. They can't say much, but they just said that the pending approval with the long stop date, that means this has to be done by the 21st of May. We still think this can be done. I mean, they didn't really say why there has been a delay, but this is a Temasek Link company that wants to sell this, so we can only assume that this deal will go through. Next slide. I'll move on to our usual weekly highlights. Next slide. So there was a lot of property news last week. In general, if I start with the HDB, so HDB has actually the prices kind of slipped a little bit in the first quarter, 0.1. So this is the first decline in 7 years. The volumes are also down. So the volumes here will impact more the real estate agents because the 6 quarters of year-on-year decline. Yeah, so it's been declining, but this is the lowest decline in these 6 quarters. Property price is still creeping up about 0.9. So property price in Singapore, at least officially, is still rising about 3% per year. I think this is in the sense positive that, of course, not as property owners, but this positive in the sense that there'll be very low risk of property cooling measures by the authorities. The unit sold was actually weak. There was actually 40% down. But I think in April, you saw the number. April bounced back very sharply. But I think year to date is still down. But at least for the fourth quarter, the number of private homes sold down 40%. But this is partly because the number of launches is also down 40%. So it's not so much that the demand is not strong. It's just that there has been fewer launches. So this decline 1%, 40% decline is going to hurt the real estate agents because of the lower units sold. Commercial rent, every quarter the URA will just provide some data on commercial rent, but I think you did heard a lot of it from all the REITs. So generally still healthy because supply is just very tight. So Singapore property, commercial or market, office, industrial, all very healthy, because of the very tight supply. We had some retail sales in the US. I think we always use this just to gauge consumer spending in the US, and which is the anchor of the whole US economy. So that is still very strong. So even if you take out the volatile motor vehicles, you take out gas price, because oil price went up, it's still growing about 4%. So it's still very healthy retail sales. The headline number is up 5 because of the gasoline prices. Next slide. So in terms of our tactical views, our weekly views, so yeah, of course, this is a bit of hyperbole, a bit of sensationalizing. But anyway, as an investor, we're looking for two monsters to watch. So we're on Godzilla watch for 2026. So what we mean by Godzilla watch or super cycle is we're watching for Godzilla's semiconductor cycle, and also Godzilla El Nino going to happen this year. Again, I'm just sensationalizing it so that everyone can remember. So in terms of the semiconductor cycle, I think we already seen how share prices have moved. So the average up cycle for semiconductors, there's many ways to measure. We're just using over the past 12 months, the year-on-year growth. The typical up cycle is about 30 months. So the current one is 24, longest 72. So there is still upside to this. And the market is beginning to obviously sense as a super cycle or Godzilla cycle coming for semiconductors. The stocks or the semiconductor ETF is up 51%. Intel's at all-time high after 25 years. And then Nvidia is breaking out as a new intraday high. They're already all-time high for closing price, but intraday high, the October highs, I can't remember what's the amount, but they are looking to break out too. And of course, the optimism, what is fanning the optimism is, of course, the large language model growth. I think we did mention this before. Anthropic, or the one that produces cloud, not cloud, yeah, I hope I pronounced it right. But anyway, the revenue, if you can recall, early this year, they mentioned their revenue is annualizing at 30 billion. A year ago was, let's say, around 1 billion. So they're growing like 30 times over the past 12 months. Then we also have Terafab coming up. So Elon Musk's fab is about 25 billion together between SpaceX and Tesla. But he did mention that he's conducting a 1 million wafers per month. Of course, we can't times 10, it'd be too simple. This could eventually lead to almost 750 billion of investments in fabs. And of course, with the IPOs of Anthropic, OpenAI, and SpaceX, Grok, all this money would eventually be raised for AI and also to build up the digital infrastructure, which is data center. And we think and all this will lead towards more semiconductors. And the big winner we think is still going to be semiconductor equipment makers and suppliers. I know in Singapore, like your UMS and so forth, because we think semiconductor equipment makers have like a monopoly. in the high-end AI. So you're talking about ASML, Frankel's AMSML, UMS LAM, and also the applied materials. So these will be the big winners because equipment makers are really almost monopoly. So the next Godzilla to watch is El Nino. There is potential for this. It's going to be a strong El Nino. So by second half of this year, it's going to be very warm and dry and maybe a lot of haze. But this could be the strongest in 140 years. Of course, this is all just initial readings. So if you use the NOAA, I forgot the acronym, but what they do is they measure the Pacific Oceans, and this is in line with possibly a super El Nino. So the last severe, why is this important to us? Apart from it being very, very hot, is that the last time they had a severe or super El Nino was 1998 when palm oil production was down 8% and then palm oil price shot up 71%. 2016, that was the last time, then palm production in Malaysia I'm referring to was down 13 and then prices up 21. So if this happens, then of course palm oil prices can rally. Okay, because what happens is that when the weather is very dry, what it means that the trees will be under stress and then they will try to conserve water, which means they will have less flowers and then less fruits. Yeah, okay. Don't ask me why, I just read Gemini on this. So the other thing is that, so for the events that's coming up for this week, 29 is going to be very busy. You have the FOMC meeting, Microsoft, Meta, and Google will be releasing the results. Of course, this is 29 of the US time, 29. For Singapore, we'll have Sing Song, and then, yeah, this is all for your reference. This week, we will have webinar by Southern Alliance Mining. So if you want to know more about iron ore mining in Malaysia, then we're on the 30th of April. Next slide. Okay, these are just some of the charts. If you look at this chart, the blue line is basically on the left, HDB resale price. So it's still running very strong. The volumes are down at the color. Then this is our property price. You see all these red lines are raised ABSD, raised ABSD. So even though we raise ABSD, the property price is still climbing up, but at a slower pace. So whenever there's cooling measure, property price can still recover. But I think this time around is a bit slower because we don't have the foreign demand, I guess. Next slide. Then this is just the commercial rents. I think rental growth is generally just stable, and then the supply is very thin. As you look at retail supply, it's only like 1%. Office is 2%. So supply is just very thin per year up to 2028. So that's what's holding rents and of course market values. Next slide. If you move on to the residential market, Singapore private residential market, it's not just the new home sales that's down. We mentioned 40%. The secondary market is also down 9%. So all this is not going to be positive for the real estate agents. But the market is very healthy. If you look at the amount of inventory, so inventory is basically the last 12 months demand. Then we take what is units that are already received planning approvals. So you're talking about less than 2 years of inventory, and then the average is 2.5 years. Yeah, so I agree. I mean, the property market is strong. It's nothing to do with the weak demand. It's just not enough launches. So like we mentioned, the launches in first quarter was down 40%. So yeah, so that's the reason. And you can see there's very little inventory there. Yeah, so thanks for the comment there. Yeah. Next slide. The Tengah sold 98%. Yeah. You never imagine one weekend can sell everything. That's like, yeah. Okay, anyway, so this is the semiconductor chart here. So the blue line you see here is basically semiconductor sales year on year. And then the beige color here is just the total billings. So this is global sales. So what we're just trying to say is that a typical cycle can last 7 months. That means up cycle, that means the chart going up is 7 months and some 25. The average is 30. The longest was December 2022. If you look at the chart here, you see the Feb 01. So that's the longest, 72 months. Right now, we are 24 up to February. So we think this cycle can last really long because we are talking about the build-up of AI digital infrastructure, especially when it's not just the hyperscalers buying semiconductors, it's also Elon Musk, I guess, or Tesla or SpaceX for their growth. That the semiconductors being used now will be for their space usage. I mean, they want to build data center in space. I'm not sure how that happens, but also for the robots. So the demand for chips will move outside of just the data center and GPUs is also for for the self-driving cars, for his data center in the sky, and also for robots. So that's why we think this could be a huge Godzilla cycle, I guess. Yeah, I'm just using it again, this word. Next slide. So this is my last slide before I hand it over to Darren. So in terms of the production, so if you look at this slide, whenever production comes down, which is the blue line, but during the El Nino, so the red line will spike up. So you will notice that the red line spikes up when there's a strong El Nino. So 1998, which is between 96, 99, and then 2014, 2016. So when production collapsed, prices will spike. I'm not sure what happened in 2020. I think because of the production came down also but not El Nino, because of the pandemic, people couldn't harvest. But in general, when the blue line comes down, then you'll notice that the red line will jump up, obviously, because production is down. So just to show that if there is a big Godzilla El Nino, then palm oil prices could spike. Okay, I'll hand it over to Darren. I think he just came off from another meeting. Yeah, thanks everyone.
Yeah, thanks, Paul. Let me run through some of the REITs results. So first for FCT, the defensive malls weather macro uncertainty. The malls, suburban malls, mainly focus on the essential services. So about 54% of their tenants are in essential services. Yeah, so for their results, this for FCT is their first half 26 results because their financial year end is in October. So their first half 26 results were in line with our expectations. So their gross revenue increased by 20.3%. That's mainly from the acquisition of the North Point City South Wing, partially offset by a divestment of Yishun 10 retail podium and the slight downtime at the AEI at the Hougang Mall. Yeah, and for finance costs, it increased, but that's mainly from the additional borrowings taken up from the North Point City South Wing acquisition. But all in all, the cost of debt, it declined for the second quarter by 30 basis points to 2.2%. Yeah, so this is from 2.8% in second quarter 25. So it's about a 60 basis points decline year on year. Yeah, and for this first half 26, they retained 4.6 million of income. So that is for working capital purposes. So the DPU is 6.1%. So that's in line with our expectations. Yeah, so for positives, the portfolio operations were very stable and healthy. So their portfolio occupancy increased to 99.8%. So if you remember the previous quarter, some of the cinema spaces vacated. So now it is been backfilled. So that is the cinema space at Causeway Point and Century Square. And also the GV also vacated Tiong Bahru Plaza, but that has been already released by X Venture. So the occupancy now is at 99.8%. So X Venture is a new kind of concept, like some indoor entertainment sports kind of concept. Yeah, and for this quarter, rental reversions, or rather for this half, rental reversions were healthy at 6.5%. So continues from the 7.8% in 2025. And the guidance given is basically 5% mid-single digit rental reversions for the FY 2026. Yeah, and for shopper traffic and tenant sales, it remains healthy. Yeah, and for capital management as well, gearing now is at 40%. The cost of that, like I mentioned, improved, and utility costs for FCT, they are fully hedged for 2026, so no impact from higher utility costs. And 2027, they will continue to monitor, but right now they are partially hedged, so it's about 50% of their exposure is hedged. Yeah, and for FCT, their organic growth going forward will mainly be from the completion of AEI, so that will help to enhance the asset productivity and the MPI yield. And Hougang Mall, currently the AEI is already 88% pre-committed, so on track for September 2026 completion. And the next AEI that will start will be next, and that will commence in May basically in May next month. Yeah, and for acquisitions or inorganic growth front, acquisitions and divestment continues to be opportunistic. So if you saw in the media, there are reports that White Sands, there are potential talks to divest White Sands for 470 million. So that is still so-called in talks, and there's no guarantee there. Yeah, so we'll continue to monitor that. And for the operations part, the retail demand continues to be supported by population growth, rising household incomes and government support measures like the CDC vouchers, as well as a favorable supply conditions. So, of there's like limited, like less than 1% of CAGR retail supply over the next 3 years annually. And on top of that, only about 20% is for suburban retail. So really there is a very limited supply upcoming. Yeah, so we maintain our buy call and our target price 270. Dividend yield, forward dividend yield of about 5.4%. Yeah, next slide, please. Yeah, so for Suntec REIT, their strength in their Singapore portfolio continues, especially in the retail and office space. Yeah, next slide, please. Yeah, so for their results, it was in line with expectations. The revenue was up mainly from stronger performance across the Singapore and office retail and office and retail properties, as well as stronger performance at the JV side of MBFC and ORQ. Yeah, so for the first quarter, they reported lower financing costs. So that's about 5.8 million lower. And for DPU wise, they're up 23.9%. It's also partially from the fact that last year, or rather, they had this higher withholding tax provision. So this year, they've basically lower 2 million lower withholding tax position because they managed to retain the Australian MIT status. Yeah, so for the positives, the Singapore office remained healthy, almost 99% occupancy, and rent reversions remain very high at 9.5%. So for Singapore office, the guidance is about 5% positive rent reversion for the full year. And for SG retail, right now it's also 99% occupied, so it's very healthy, and rent reversion 14.3%. So for that, the guidance for SG retail is about 10% for the full year. Yeah, and for the negatives for Suntec REIT is that their overseas portfolio remained the drag. So basically, it's stable quarter on quarter. So despite it being so-called the laggard and the portfolio is maintained basically stable. So it's mainly weighed by the 55 Curry Street and Southgate complex. So occupancy still remains 66% and about 87% respectively. And the Minster building also no change in occupancy, so quarter on quarter, so stable at 85.4%. Yeah, so going forward on their strategy on capital management, they're looking to divest some properties, probably those underperforming overseas assets, but of course it remains challenging. Of course, they're not even fully occupied. But their strategy is to remain, or rather to maintain leverage around 40%. So right now it's at 41.6%. Yeah, and for cost of debt wise, we do expect it to increase slightly to about 3.7%. So first quarter it was 3.56. That's mainly from the fact that in first quarter 2026, some of the low cost Australian interest rate swaps expired. So those were at rates at between 0.4% to 0.5%. Those were taken during the COVID period. So now those have expired, and we expect the cost of debt to rise slightly for the full year 2026. Yeah, so for the Suntec Convention Centre, the performance is expected to be stable despite all the geopolitical uncertainties. It's noted that a lot of corporates, they are taking a wait and see approach, so they are taking longer to confirm events. So previously, usually with 3 months prior to the event, the corporates will lock in already, but now they're taking like 1 to 2 months to finalize everything. So they're just taking longer to confirm the events. But generally, it's still healthy. There are no cancellations, no postponements. And for utility costs for Suntec City, it is fully locked in until end 2027. For MBFC and ORQ, it's until end 2027. For Suntec City, it's end 2026. And for Australia and UK, they are triple net leases, so the tenants, they bear the utility costs themselves. So Suntec is minimal exposure to rising electricity or energy costs. Yeah, so because of the new sponsor, the manager, so Suntec, they will undergo a strategic review of the whole portfolio once the board of directors has been finalized. Yeah, so Suntec REIT, they're paying a forward yield of about 5.2%, and no change to our TP, and we maintain our accumulate. Yeah, next slide, please. Yeah, so next I'll do a Phillip On The Ground on CICT. So first of all, their first quarter 2025 business update. Yeah, next slide, please. Yeah, so for first quarter, their MPI was up about 8%. That's mainly from the step-up acquisition of the Capital Spring and Galileo. So now they own 100% in Capital Spring. Operations-wise, retail occupancy remained healthy at almost 98%. So rental reversions for CICT is downtown malls 3.9%, suburban 5.1%. The guidance for retail for CICT is about mid-single digit, so similar to FCT about 5%. Tenant sales also healthy at 2.2% increase year on year. For office, the occupancy dipped quarter on quarter, so now it's at 93.7%. But that's mainly from the MAC, so that is property in Germany. So the German occupancy dropped to 83.1%. Yeah, and for the office, we are looking at a rent reversion of 6.1% and a similar mid-single digit guidance for office as well. Yeah, so for CICT, their energy rates are also all locked in across the portfolio until at least end 2026. So that is similar to a lot of the REITs in Singapore where the energy costs are hedged. And for CICT, their cost of debt guidance expected to be below 3%. And we are, upcoming, there will be some AEIs at Plaza Sing and the Atrium also that are starting in third quarter. So for CICT, they are paying a trailing yield of about 4.7% after the share price performed well after the announcement of the transaction that I'll talk about next slide, please. So they are proposing to acquire Paragon. So the agreed property value is about 3.9 billion Singapore dollars. So basically, how they are funding it is they'll use they're at the same time they're also divesting Asia Square Tower 2. So that is at a 9.9% premium above the market valuation of about 2.2 billion. So they are so-called recycling this Asia Square Tower 2 at an exit yield of 3%, 81 years remaining leasehold property into a freehold Paragon with a net yield, MPI yield of about 3.9%. So that is MPI accretive and DPU accretive. So originally they were looking to use the full proceeds of the Asia Square Tower divestment as well as debt and 600 million excuse me, and a 600 million private placement. So originally the pro forma DPU impact was a 2.1% accretion, but now since the private placement was the demand was very strong, 4.8 times covered, and they upsized the private placement from 600 million to 750 million. So because of that, the pro forma DPU accretion has declined to 1.7%. So it's a slight decline from the larger fundraise. So it was done at a $2.30 per unit. So that's a 4% discount to the previous day's trade average VWAP. Yeah, so the new issue of this 750 million units, they will start listing on the SGX on 29 April. So that's in 2 days' time. Yeah, and so for this transaction of acquisition of Paragon, unit holders approval is required at the AGM. So that will be likely this quarter or next quarter. Yeah, so this whole transaction is DPU accretive mainly from the fact that they're exiting at a very good price, 3% exit yield, and redeploying the proceeds at a 3.9% MPI yield. Yeah, next slide, please. Yeah, so I'm moving to the Singapore REITs monthly update. So we think the negatives are largely priced in from stagflation risk and inflation risk, and as a result, central banks becoming more hawkish. So we see the performance last month, it's really all down across the board. So year to date is down about 8%. Yeah, next slide, please. So for this REIT monthly, we did a compilation of the most, or rather the equity fundraisers that were done in since 2025. So over the past 1 year or so. So looking at the table here, about 50% of the time after the announcement of an equity fundraise or announcement of an DPU accretive acquisition, half of the time the 1 day share price performance is down. But one thing to note is that in this table, most of the transactions here that they propose to acquire are DPU accretive, except for the Keppel REIT 1 of MBFC Tower 3. So that is the only DPU dilutive transaction. So looking at this, the accretive deals can really outperform. So in 4 out of 10 cases, the share price rose as the investors they priced in the fact that the acquisition is DPU accretive and that will benefit the REIT in the long term. So that's why probably the share price increased in 4 of the 10 times. But other than that, because of the equity fund raise, even though the transaction is DPU accretive, we saw the REITs declined immediately after the announcement date. Yeah, but 1 month after the announcement, we see there is the recovery in share price potential. Like in 5 out of 8 times, the share price recovered. And by then, 1 month after that, most of the time, the new units in issue were already begin listing. Like the new units have already been issued. Yeah, and if you look at a longer term, 3 months, so it's really less indicative. It's more on execution wise and broader market conditions. Yeah, but one takeaway is that from this is that the deal quality is really key. So the only DPU dilutive transaction, which was a Keppel REIT one, saw immediate share price decline of 6.7%, and the share price didn't recover 1 month later or even 3 months later. But of course, the share price performance for that is also impacted by the Iran war and other geopolitical matters. Yeah, and markets will really reward high quality DPU accretive transactions. Like so far, we've seen the Paragon REIT one and penalize the dilutive or weaker deals. Yeah, next slide, please. So more on our subset, our indicators, monthly indicators. We see the dividend yield spread now is at 10-year average. So now it's around 3.8%. So we still think there is potential for DPU growth this year. We are forecasting about 3% DPU growth, mainly from interest rates that are still lower and stable operating performance. Yeah, so we see the 3-month SORA also continues to decline. So there will be some interest, possibly some interest savings from that as well. Yeah, next slide, please. Yeah, forward dividend yield, it rose mainly from the share price decline. And on top of that, the absolute DPU, we also expect it to increase. So there is potential for forward dividend yield to continue to increase. And price to NAV is down mainly from the share price. Yeah, next slide, please. Yeah, so looking at subsector indicators, retail sales was strong in February, mainly from CNY, being in February instead of January the previous year. Yeah, but going forward, we think the demand will still be there. So we are looking at mid to high single digit retail rent reversions going forward, like I mentioned in the Suntec and FCT. Yeah, next slide, please. And for hospitality, there was a recovery in visitor arrivals in March, so it's 10% up. And the hotel RevPAR is also up 10.8%. But going forward with like the war and more uncertainty, geopolitical uncertainty, the outlook is more clouded and is still quite uncertain for RevPAR. But our base case is still rather low single digit RevPAR growth in 2026. Yeah, next slide, please. And this table is our coverage and our target prices before the first quarter results. Yep. Yeah, so that's all for me. We can begin the Q&A. Yeah, thanks.
I guess I'll get the ball rolling. So there was a question on the result expectation for Magnificent Seven stocks. So I guess I'll start off with Amazon and Apple, then I'll pass around to other analysts. So for Amazon, the focus will still be on AWS and whether there's going to be continued AI momentum. So currently we're expecting around 25 to 30% growth. So anything that if it's less than 20%, then that's probably going to be a bearish signal. And then we're also waiting for their commentary on their OpenAI deal and Anthropic. So currently, they've secured $100 billion of AWS spending over the 8 years. And Anthropic also agreed to use AWS as the primary cloud provider. So we just wanted to see whether they provide any more color on that and maybe more color on the backdrop and the demand visibility. Then moving on to Apple. The Apple guided a really positive next quarter because of the iPhone 17 strong growth. So I guess several things we're going to be looking at is first, last quarter they had a very strong China growth. It's around 30 to 38%. So we want to see whether that growth durability was still there, especially given the US-China tension, to see whether it's sustainable. And their iPhone 17, they've guided that it's going to be continuous strength. So we want to see whether they can actually deliver that, because we take a look at the worldwide phone shipment, we can actually see that their market share is dropping back to previous phase. So we don't know whether there's going to be a post-launch normalization. Another thing we want to watch out is probably their comment on the rising memory cost and the tariff. So whether that's going to be a continued pressure on the company. Yeah, so that's all for Amazon and Apple. I guess I'll pass it to the other analysts. Thanks.
Thanks, Hedy. I can take on the other questions. There's a question on Soybuild. I view so our is still at 1 presents about 40% upside. For Soybuild, we expect a normalization of the order book because previously they secured the $600 million PSA contract, which is exceptional. The management said that the kind of contracts they are expecting will be 200 to 300 million. So we do expect order book to normalize down to about 700 to 800 million. But across this year itself, we do expect the execution of the PSA project to drive their earnings growth. And we think that going forward, because Soybuild has a strong track record in semiconductor facilities. For example, previously they constructed the facility for Suntect, as well as for high-end warehouses, so like those with high floor to ceiling heights. So we do think that they are able to secure further potential semiconductor facility contracts going forward, which the Singapore RIE budget for 2030, it has increased by 32%. So the budget is $37 billion over the next 5 years for research and innovation. Yeah, so we do think that this acts as a tailwind for Soybuild as well. Yeah. Is Hong Leong Asia's acquisition good? Yeah, so for context, they acquired 90 million. They are involved in the $90 million acquisition of Yong Tai Lung. So Yong Tai Lung is previously involved in the construction of bomb shelters, metal frames, staircase railings for within HDB blocks itself. And the acquisition price is quite attractive at about 4.3 times PE ratio. So it is earnings accretive. We think that it will increase the earnings of Hong Leong Asia by about 5%. And yeah, so Yong Tai Lung, if you think about the entire HDB market value, they are involved in about 5% of the cost involved of building the entire HDB because of the cost of the bomb shelter itself. Yeah, so that's about, if you think of the entire building up supply of HDB itself, this will add about 5% to Hong Leong Asia. So that is one way you can think about it. Yeah. So we do think that the acquisition is good. I think it also signals Hong Leong Asia's desire to enter more into Singapore markets. Yeah, especially with its existing ready-mix concrete business. Yeah. With the recent surge in share price for AMD, is the fundamentals overstretched? Yeah, so when we talk about valuations, after this recent share price surge, AMD is trading at about a forward PE of 51 times. So that is slightly above its historical average forward PE of about 46 times, but it's still within the one standard deviation. The one standard deviation is 61 times. So I don't think it's overstretched. I think that there's room for the valuations to expand, especially from the share price catalyst in the second half, which is the IPO of Anthropic, OpenAI, and SpaceX. We do think that this will act as a catalyst for the semiconductor stocks. Yeah. Is Qualcomm a beneficiary of CPU? No. They are very small beneficiary, like because they are only involved in the handset segment. Yeah, so they produce chips for phones, but they are not involved in the the higher value contracts like data center server CPUs. Qualcomm is not involved in that. But they did mention that they are potentially entering into the data center segment from 2027 onwards. Yeah. The main beneficiary will still be Intel, AMD, as well as ARM Holdings. These are the three main companies involved in the data center server CPU market. AMD valuations now after the surge. I think I've answered that. Is Aztec in the semicon business? No. Like at most very small, because I think they are more involved in previously their main customer was Amazon. So they are involved in manufacturing the plastic components for Amazon previously. Yeah. But I think now they are more involved in the medtech business. Yeah. Semiconductor share price has risen a lot, especially AEM. What is the outlook for semiconductor shares? Yeah, I think as what Paul mentioned previously, we do still see a long runway ahead, especially this year because as hyperscalers increase their capex, the foundry players have also increased their capex guidance. For example, TSMC and Intel, they are increasing their capex on semiconductor equipment spending. So as the equipment players benefit, we do think that this will also flow to semiconductors companies, EM as well as UMS. Yeah. Is JP a semiconductor equipment maker? What's the outlook of JP? They are not the high-end equipment HML applied material. So they are more involved in the components because they are subsidiary of UMS. So you can think of it as I'm not exactly sure, so because I haven't met their management, but believe they supply components for equipment players. Yeah. For example, the chain. Yeah. Okay, I hand over the time to my other colleague.
Sorry. Thanks, Ivan. I'll answer some questions. Continue with the Max 7 result. I will go with Alphabet and Meta. So for Alphabet, for ad business, I will definitely more focusing on the update on AI mode, because I feel like this product is the closest one to match with Alphabet agentic commerce goal. So there's also can hope that they can provide more insight on how they want to fully utilize it, because now Gemini the integration is pretty mature, and then the model, even though maybe it's not what they're definitely still expecting more development, but it's becoming more mature. So of course, next thing that is really depends on how they want to scale this thing. And secondly, of course, we'll see how much is for Google Cloud, the backlog now. So I will also be expecting some of the comments about OpenAI IPO, because OpenAI always has planned to open the ad business. But if you really ask me, I think at the moment, OpenAI IPO will benefit Google Cloud, because they will continue to have a partnership, and they are not as mutually exclusive partner with Microsoft at the moment. So for Google Cloud business, we expect like 45% year-on-year growth this year. And I think regarding to OpenAI ad business at the moment, Alphabet still has we think still have a lot of advantage because this is a company that with a very mature ecosystem before even they developed all of this LLM thingy, they are already very profitable before it. So this powerful LLM is can kind of like serve as an add-on thing for them to be more profitable. But at the same time, OpenAI still need to figure out how they want to monetize it, monetize this LLM thingy. Yeah. And for Meta, I think their ad business result is going to be resilient. I think the entire focus will still be on CapEx. They are spending a lot of money on chips and energy, but uh, I think they still kind of need to give a more precise monetization plan that how they want to merge all of this into their ad business perfectly like Alphabet. So would expect some of the like angle. And there's a questions about Reddit. How's the Reddit upcoming result? Honestly, among all the key performance indicator for Reddit, I'll be really focusing on ARPU, to be honest, which is average price per user. So my understanding is that marketer likes Reddit because it doesn't matter whether the user is logged in or logged out, they can still push the ad regardless since they are community based. So Reddit has been trying to expand it internationally and doing roadshow and everything. So if it works, it should reflect on ARPU. And because the gap between US ARPU and international ARPU is pretty big, so it's almost like 5 times bigger for US ARPU compared to international one. So if the upcoming result can shows that all of this effort can actually close the gap of ARPU, and then I believe that the monetization is working in the position direction. Yeah. I think that's all for me. Yeah, I'll pass the time to my colleagues for other questions. Thanks very much.
Hi, everyone. Thank you, Serena. So I'm continuing on the Magnificent Seven question on the Microsoft. What are we looking forward? What are we expecting? Two things, I guess. First is on the cloud business. Second is on the software business. For the software business, recently, the last recent few months, they released this announcement that by mid-year, there's going to be price hikes on the subscriptions, and this would affect the broader subscription, the enterprises services, the worker services, frontline services. So we are looking whether there will be any guidance or any thing that say that software Microsoft remain resilient or not, but we do expect resilience. And then after on the cloud businesses, yes, the Azure. Previously, I think in the previous quarter, what they said that by the year end, there's still going to be supply bottleneck in the capacity of how much they could provide in terms of the cloud capacity. So hence, one of the reasons why the Azure cloud slowed, and also at the same time, what they say is that they spread out the cloud capacity to other offerings as well, because they want to grow the other offerings, not only just the Azure. But with recently, we get the announcement of the increment of their data center increment, as well as, for example, in the Microsoft takeover the additional Albion, Texas campus cloud capacity that Oracle didn't want. So, for example, from this additional capacity, though we think that the amount is not as would materially affect the total size of gigawatt that they could supply, but then again, they probably could be raised in guidance of how much cloud Azure that they could provide. Yes. So that's it for me for the Microsoft. Hand over to my colleague for any other questions. Thank you.
Yeah, let me take on few. How was First REIT's business update? Yeah, so for First REIT's business update, their DPU was down quite a bit. So it's down about 14% year on year. But if you look at quarter on quarter wise, it's down by 2 cents. So it's about 3.8% decline. Then again is they are impacted by the FX again. So that's been the case for since forever. They're impacted by the depreciation of the rupiah and the Japanese yen as well. So in the current situation, because they are waiting to a kind of divest in parts, right? So the first part is the proposed divestment that they already announced, and we talked about it before. And the other one is the put option, so that will kind of come at a later date. So while they are waiting to do that, basically their Indonesian rupiah is 0% hedged, their income, so they are fully exposed to the currency weakness. So so basically going forward, we do expect some weakness in their performance, mainly from the depreciation of Indonesian rupiah. But from a portfolio perspective, the assuming the divestment happens, so for that the unit holders will need to have a simple majority at the AGM. So that's a 50% approval rate. So once the divestment goes through, then the portfolio basically will over time will have no more Indonesian properties, and they'll move on to developed markets. And as a result, the income also, DP will also drop significantly because of the absence of income. That's pending the strategic review to see what acquisitions that they take to kind of basically what they acquire to replace the divested assets. Yeah, but generally, just for the business update, everything remains stable other than the fact that they are impacted by the Japanese yen and the rupiah. Yeah. um, yeah, so another one. Let me find it. Stonelight, any target price? Yeah, Stonelight, the target price is for us is $1.89, €1.89. €1, yeah. And basically for Stonelight, you'll benefit from the fact that now the inflation expectations of higher inflation are coming back into play. So their portfolio is one of the most resilient, as their leases are on a yearly escalation step up, and that's based on rental the CPI indexation. So basically every year, based on the CPI, they can increase their rents. Most of it is a full 100% increase in the CPI that will flow through into the rents. And for Italy it's 75%. Yeah, but most of it is 100%. Yeah, so Stonelight will benefit from that. That's a huge one, and as well as other factors like their investment into the data center space, where we expect a lot of NAV accretion in the longer term, capital upside potential as well. Yeah, so that is for us for Stonelight. What's wrong with CapitaLand India Trust after the XD date price dropped drastically and still no chance of going back? Is it micro or macro issue here, or both? So definitely part of it is the macro issue, where we saw a lot of the REITs, the share price basically kind of for the month of March, it really didn't perform well. So from my perspective, I think it's more of a macro issue. Yeah, for that. So get the XD date, I think is sometime in February. Yeah. So since then, the share price performance has been relatively flat. Yeah, but we think it's more of a macro issue, as all of the REITs were also impacted by that. Yeah. So I'll hand over to my colleagues. Thanks.
Yeah, thanks, Darren. So let me just try to answer as many before I move on to the TA section. Why iFast dropped after results? I'm not too sure. I thought the results was pretty good. I really don't know. I was in the call, but I didn't listen to the whole thing. So apologies. I will have to get Glenn to answer you, but I don't think he's in right now. Yeah. So apologies for that. Not really sure. The numbers were good, but I couldn't. There was nothing really fact out that when I was listening in. RX share price going down. May I know the reason? IX, the share price the share price doubled in 3 weeks, so maybe there could be some consolidation at this level. What we are looking for from IX, at least from news flow point of view, would be some developments on the compound pharmacy. So in compound pharmacy, they are compound pharmacy is another way for them to monetize the rest of their almost 40 types of drugs that they have, apart from the Wayfarming that they're working now with the government. So that is what you should in terms of news flow. The second news flow is probably the approval by the US government, by the FDA, emergency use. So as not to wait until the phase 3 completion. That will be the other news flow. We are trying to get them for corporate insights, so maybe that can shed more light. But my own view, I mean, if you can just, even if you hold on at this price, I thought it was quite an achievement because the share price is double in 3 weeks. Yeah, I mean that's just my view. Why is Add Value share price up? So Add Value announced that they're going to be listing one of their subsidiaries. Why Add Value is doing well operationally is because they took them 3 years to develop this solution. It's a bit complicated. So you know, when you do satellites, there's the LEO, the low orbit satellite. So for low orbit, there used to be some dark spots because the LEO satellite in the sky, they need to connect to a ground terminal. But very layman. So what happened is that Add Value has come up with a solution that will allow the LEO satellite to communicate with a GEO satellite. Okay, I'm making it confusing. So GEO is the one that's further up in space. It's quite stationary. So they came up with this technology solution that instead of the LEO satellite that need to connect to the ground, they can actually connect up to the GEO satellite, then connect down to the ground station. Yeah, probably confused everyone, but basically instead of having the satellite keep on having connection relaying to the ground station, it can connect to another satellite. So that is the reason. But again, for a Nasdaq listing, we're really not sure. You know, we've seen a lot of Malaysian companies, Singapore companies. You can Google some pot, chicken, chicken restaurant. Of course, Oh My Home, they've also listed their Nasdaq. And of course, apart from the first 1-2 day pop, then it doesn't really go anywhere. But again, we're not sure about this one. I know the target prices coming up here is about 30 times price to sales. So they are definitely doing well, but the valuations wise, I'm not sure. But the reason why it's up is mainly because of this particular news. Yeah, I hope that helps. Yeah. Ultra Green, please comment on this. Yeah, and okay, we don't have coverage for Ultra Green, but it is a really good company. I think in a sense that what they do, just for everyone who may not know, is that during surgery, for certain types of surgery, you inject this particular chemical, which is very safe. I think been tested many times, and then it will kind of light up the good tissues, so that when on the screen, when you're doing operation on the screen, the surgeon can actually see what's lighted up on the camera. So, but the core thing is that their solution is becoming more of a standard of care. That means must use. I mean, in the technical word, standard of care, but in reality, you must use. Otherwise, if got any issues, you're probably going to get sued. And then probably you can claim insurance as insurance coverage by using this. So they're getting that standard of care usage in the US for certain surgeries, and the number of surgeries is widening. And they are also coming into Asia and Europe. They are guiding this year a revenue growth of 20 to 30%. So you can assume the earnings should outgrow it. So you can assume this year the earnings should grow at least 30% and above. Yeah. So it is a good company. I'm just yeah, we give us some time to understand. I mean, yeah, I mean like illuminescent solution in the body for surgery. I mean, we're obviously not expert in this. So we just need time to understand it. Is the SGX RegCo disclosure push expected to lift SG market valuations? I think it will help. I think, from my understanding, the new RegCo disclosure means the company must put a concrete dividend policy, must put specific like how they're going to create shareholder value. But you know, it will help at the margin. I mean, but some companies they have they will just disclose, but it doesn't mean much. I mean, they treat the company like a private company. I think it will help at the margin, but not all companies are going to change. I mean, we met some companies before, we won't mention who. Then we said, can we even meet them? No, they're totally not interested, because to them, they want to keep it private. They run the listed company like their own private company. And some of it also, they have a listed company mainly because they want to, it's a way to transfer wealth to the next generation. And it is very transparent. Everybody can see, right, listed company. If you put it private, then a lot of the family members might have doubts as to where the money is going. So that's one reason they have the listco. Maybe not to help minority. Another issue is also some listed companies don't see the reason to promote the stock since they can't sell it. Maybe now it's better because now there are placement blocks and so forth. But these are some of the reasons. Yeah. So I think it will help, of course, especially when we spoke to the press, we did say that it's like mandatory labeling. When you want to buy a particular drug, at least you can see the ingredients. So you want to buy a particular investment, at least you can see what is the dividend policy at the minimum, how they plan to help create shareholder value. So it's like some labeling, but it doesn't mean that the drug you buy is good. Let me just force people to put like how much sugar in the drink or so forth. Yeah, I hope that helps us. Sorry a bit. Yeah. A big drop for all tech today. Any news and what is it? Yeah, my target price for all tech is 272. There's an AGM coming up, but apart from that, there isn't any news. What you need to watch for is that so far the agreement for the SAF project that will spike their contract order book by 5 times. It's still a heads agreement, so you need to see that finalization of the deal. Then that can help the share price. They are still planning the dual listing in Malaysia that can also help the share price, and hopefully do a bonus issue so that can help the share price. Yeah. But again, this stock, I think this month also up like 80-90%. So I think sometimes all this stock need to, I guess, some consolidation. Yeah. But there's no particular news. Sorry, just to answer. Why Thai baht share really big? Okay, so this is my own reason because the consume. I mean, Thailand is facing a lot of inflation problem. So when you have inflation issues, when you have crop issues, consumer spending is big in Thailand. Is going to hurt Thai baht. So that is generally the whole sentiment. I mean, so in general, thematically, consumer spending is a very poor sector to be in because emerging market consumer spending is very weak because of inflation and so forth. Because of especially with the Middle East conflict, cost of living has spiked up. Okay, maybe because of that they might drink more, but in general, they may not cause them to drink. Your view on Telechoice. So I think Telechoice has probably hit our target price. I'm not sure. I think maybe 27, if I'm not mistaken. So Telechoice, if you notice, the recent news they have been buying back shares. So they have been buying back shares very aggressively, as much as 26 cents. We're not particularly sure why, because we always thought that they want the high liquidity. But what to watch out for, of course, they're also having an AGM, but what to watch out for is the big contract. So the contract, like we mentioned, is so big that they had to actually announce that they are bidding for it. So if the contract really works out, the data center contract, we can only assume that it's going to be really huge. I don't have a number, I don't have a probability, but I think they mentioned that they are one of 2 bidders. So yeah. So our target price slip my mind. I think it's at 27. I think my target price is excluding this contract because of course we do not know. So it's quite interesting that they are aggressively buying back shares. Yeah. So at the very least, you have somebody supporting the share price, which is the company at these levels. Yeah. Yeah, my target price, sorry, give me a minute, is 27.5 cents. So I think they bought as aggressive as 26 cents recently. Yeah. Paul, the arbitration news on Keppel, is it material? No, yeah, it's I hardly take notice on. Yeah, it's not material. I think a lot of companies will go through all these arbitration cases. Yeah. Singtel, any reason for continuation of price down? Okay, of course, that block of Singapore shares, the discounted shares, of course, we think has some impact because everybody's going to sell. I mean, like we mentioned before, the youngest person holding the shares is at least 50. I don't think anyone wants to keep longer after keeping for 20 over years, right? Or almost 30 years. So we think there's a bit of overhang. But also we think, like we highlighted before, sorry to continue repeating this, so that's my only rationale, is that a lot of Singtel's earnings is coming from emerging markets like India, Indonesia, Thailand. So, and with the impact of the war, of course, discretionary spending will be impacted. So spending on mobile services will be impacted. Yeah. And of course, the key one, Bati share price also have been coming down, or weakening slightly. So I think the sentiment is just weak. Fundamentally, no change, but I think the sentiment has just been very weak. And of course, Singapore mobile price competition continues to be very strong. And maybe because there's a bit of delay in the M1, maybe that kind of cause people to worry that it will still be a four-tier market and there's no room for consolidation. That's maybe, I'm just making this thing up. That could be one concern. Okay. Let me okay. Let me just hand over to Zane for technicals. Yeah. Thanks.
Yeah, thanks for moving to the technical questions. Yeah, just let me share my screen. Okay. The first question is on TeleChoice. Yeah, so for TeleChoice, I think the share price has been moving up steadily recently with more volume coming in as well. Yeah, so continue remains above the 5 SMA line, which I think is the immediate support at around 26 cents. So next, in terms of next near-term resistance levels, I think we could look at 28 cents, which was previously a bit of resistance back in 2016 and 2016, and then the next one is at 30 cents level, which was a high in 2015. Yeah. The next one for Everglory. Yeah, I think the uptrend is still going quite strong. Recently there's been a bit of recently prices I think did a bit of a pullback to retest the 94 cent support level, previous resistance level, which held as support over here. So that's still positive, and price continue to retest this $1 level. So I think in terms of, I think there's still potential for upside to potentially retest the upper Bollinger Band level again, which is like 105 right now. Yeah, and if you take the range at 94 cents to $1, that's 6 cents. So it could hit about 105, 106 as the next immediate resistance. Yeah, so I think overall the trend is still holding up well. Next one for CNMC Gold Mine. Yeah, for CNMC, I think some share price weakness recently after we see the breakdown is our support line at 145, as well as some horizontal support levels over here at 140, 141. A bit of high volume on Thursday as well. So I think we could still see a bit of a weakness continue on to perhaps retest. I think the strong support is around 121, 129 to about $1.30, which was support in February this year, as well as a swing low towards the end of March this year. So I think that will hold the price for a bit of a rebound. Yeah. Next one, going to some of the US counters. First one on MasterCard. I think share price likely to do a bit of a range bound. I think for now, some pullback from the resistance at this 520. Currently retesting the previous range resistance in start of April. So that's about $500. So I think price will do a bit of a bounce over here. Near-term resistance I think could be around 510 for that. So most likely will do a bit of a range bound with support holding at this. There's some swing lows over here at 495 to 500 over here. So most likely some sideways. Yeah, and there's also earnings coming out at the end of this week. Visa similar as well. So some pullback from the 319 resistance, this area over here, and price is retesting this prior resistance. So that's around like 307 area. So near-term resistance I think would be around 312, 313. Price would most likely do a bit of a sideways similar to MasterCard as well. Next one for Microsoft, I think for Microsoft, I think it's doing a bit of a range consolidation. So it's trying to recover up. Good thing is that last week during the pullback on Thursday, it's still holding this 413 previous swing high level. So we're still remaining above the 10 MA level. So currently some resistance at the 100 MA, this blue line over here, 420 as well as the recent swing of 433. So most likely we could see a bit of a sideways consolidation, and then see whether it can break out of this level. The next key level I think will be around $450 for Microsoft. And for Nvidia, as Paul mentioned earlier, I think Nvidia closed at the record high. So if you look at the previous last year, the highs was over here 29 October. So that the intraday high here about $212. So I think so there could still be a bit of resistance over there in the short term over there. So I think we could see price do a bit of a pullback once it hits those levels, but near term support I think will be around $205 to $208. Next one for AMD. So for AMD, I think most likely we are likely to see a bit of a pullback, as well as some consolidation in the short term. In terms of the RSI, something interesting is that currently as of Friday is about 88.9. So this is quite an extreme level if you look at for AMD. I pointed out some. I went to refer back to some of these in history, some of these points where it hit such a high RSI level. So first one back then was 2019 November to 8, where it hit about 88. We saw some pullback, some consolidation before price went up further. And then the second data point was in 2013. May over here. Similarly, we also saw a bit of some pullback and consolidation afterwards. And price mostly moved sideways thereafter. And the last one I think was in 2003 August. So for this, similarly also some consolidation sideways. And before price move up further. So most likely I think at this point in time, AMD will likely to see some share price consolidation first. And also I think if you look at the range between 190 to about the resistance was like 267, so that's about $77 of range, and you project it upwards, here about 330, 340, I think also hit about some projected target level for this range. So most likely some consolidation in the short term. Next one for Keppel, I think share price has been a bit pullback recently. I think today is also the ex-dividend date. So last week the price broke below this 1160 level. So I think for now, most likely we could see price hit a support level at this 1090 level over here, and next support is around 1070. In terms of RSI now is about 30, so it's quite low. I think it's previous time, the last time it was so low was in Liberation Day last year. So most likely I think we can see a bit of a support over here. Previous times, for example 2014 August, we also tend to see a bit of rebound afterwards. Okay, next question is on FCT. For Frasers Centrepoint Trust, I think is remaining most likely remaining in the range for now, with resistance area is around this 231 to 234 area. So I think most likely we'll see price kind of range bound, I think, for now, unless there's a breakout of this 234. Then the next level, I think, with 237 as well as 240. And next one for Keppel DCB, I think share price for now, I think is still looking quite okay. After the breakout of 231 recent level, it's currently consolidating sideways at this 237 key level. So I think most likely we will see a bit of a sideways movement for now, with at support around this 236, which was the previous resistance as well as the 10 MA, and resistance around 242 right now. So I think most likely a bit of a consolidation at the previous resistance levels. Okay, next question on Sembcorp industry. So for Sembcorp, I think price did a bit of a pullback recently after retesting this the intraday highs of this previous gap down candle in August last year. So some pullback recently, but I think most likely we'll find some support at this 665, I think around this level as well, previous swing high in October last year. So and near-term resistance likely to be around 685 to 693. So perhaps we will see some sideways consolidation first after this rally. And for next one is on Yangzijiang Maritime. Yeah, for Yangzijiang Maritime, I think share price currently doing a bit of a pullback after hitting this resistance area at 71 cents to 72 cents area. So now pullback, but it's holding support at this 65 cents level, which was this previous swing low towards the end of last year in November. So I think most likely will do some consolidation right here first. Yeah, with some near-term resistance is around like 68 to 69 cents for now. Yeah, then support is around 65 cents there. Okay, next one is on NTT DC REIT. So for NTT DC REIT, I think most overall in terms of the longer term trend since the IPO, it's a bit quite range bound. So and recently some short term trend wise, I think it's trying to recover. So there was a price broke above 95 cents as well as 96 cents levels. I think we could still see perhaps some incremental rebound to test 99 cents to the $1 area. I think this would be quite a key resistance since it was a previous range support over here for quite a few months, 2 months over here, since the start of this year. And next question is on Sheng Siong. Sheng Siong remains in a very strong uptrend. So I think overall, the longer term trend wise, I think is in this uptrend channel. So after a sharp rally that hit this channel resistance, is doing a bit of a pullback. I think near term support price will likely to hold 297 around here, this level, previous swing high in February this year. So and most likely we will see some kind of sideways price action. Immediate resistance about 305, 306, followed by 310. Yeah. So I think some sideways consolidation first. Okay, then next question is a question on holding C3AU as J69U. What's a reasonable price to add more? Yeah, so for CapitaLand integrated commercial trust, I think some key support levels I think will be a good support level to look at will be this 50 to 100 MA range over here, which is this green and blue moving averages. So I think support will hold at this 230 235 to about 240 area. So this was 240 is also like a horizontal level as well. So I think this could be an area to add more if you're looking to do so. Yeah, which has held as quite a good support in general since December last year, yeah, as well as earlier in April last year. For J6NU Frasers Centrepoint Trust, I think good level would be around if it dips towards the 226, I think there's quite a few long-term moving averages over there from the 50 to the 200 days concentrated around that. So I think that will hold as quite a good support level. Okay, then there's a question on the STI as well as the three local banks and Singtel. Okay, I'll talk about Singtel first. So I think Singtel share price recently has been continuing to pull back, but I think it's most likely hitting a support level. So over here, it's near the 200-day moving average, which is around 450, and also 450. Previously around 450 to 455. This area, there's also previous support and resistance level. So I think this is quite important horizontal level to look at. In terms of the RSI, it's also quite low as of now, about that 30, so close to being oversold. And I think it's been quite a while since Singtel has been share price has been the RSI has been so low. The last time was back in April 2024 over here, where it hit about 29 and there was a rebound that took place. Yeah, so I think price most likely will hold support at around close to this area. And moving on to the STI and the local banks. So first up on STI, I think is still in this consolidation mode. So the key reasons is still holding at the 5,020 level and some pullback recently. But I think the key support that will hold it is from this trend line over here. So if we were to hit, I think that would be somewhere closer to 4,838. That's confirming the 100 SME level as well, which price hasn't traded below that since the Liberation Day sell-off. So I think that will hold as a strong support. And most likely price is still in this consolidation phase after the rally since last year. Yeah, then moving on to the Singapore banks, first one DBS. I think recent is still holding around the $57.30 level. So some sideways, a bit of a pullback recently. I think the strong support will be around 56.10 around there. That will hold the price. So I think we'll see some kind of a sideways consolidation right now between this 56 to about 57.30. Yeah, then for OUB, kind of similar as well. The resistance has been holding constantly at around 36.70, 36.80 recently, and price pullback. So I think we'll do a bit of a range consolidation as well. I think if it hits 35.40 around this level, that will be a good support in the short term to hold the price. Yeah. And for OCBC, it's a bit more resilient, so it's holding resistance also at around 22.20, and it's back at this support level of 21.60 about that. So we could see price hold over here for a while. Yeah, and below that, the next support is around $21 to 21.20. So all three look like in the range consolidation phase, similar to STI right now. And I'll end the session with two more questions on the US counters. First one is on ServiceNow, next one is Palo Alto. With ServiceNow, overall is still in the downtrend, but I think share price could hold a bit. I think could hold in the short term, as previously there was a high volume sell down over here on 10 April. There was a rebound, and after the earnings there was gap down over here, but on Friday it did a bit of recovery. So over here, the 85, I think 81 to 85 area is likely to hold the price still, given the recent support and also previously back in March to April 2023, there was also a strong support level back then. So I think price is likely to hold support over here, do a bit of rebound, and short-term resistance wise, I think if it does try to test 95 to 99 this area, I think that will be the resistance. And for Palo Alto, I think overall this in terms of the trend is quite range bound for this counter. And recently I think it's trying to retest this key level at $180, which price broke down in end of January this year. Positive thing is that some higher lows along the way. Yeah. So I think for now we could see some consolidation take place with support. I think it's at $170 about there. There's a horizontal level as well as 10-day and 10 MA as well. So most likely we could see some higher low consolidation, and thereafter if price managed to break above 180, we could see try to hit higher towards the next level at 187 as the next key level. Yeah, so I think that's all for the TA today. I think there's no more questions. Yeah, so I think I'll conclude today's session. On behalf of my team, I'd like to thank everyone. Thank you all for joining our morning call today, as well as for all your questions. And yeah, this week we have, in terms of corporate insights webinar, we have Southern Alliance Mining on Thursday. So if you're interested to learn more about the iron ore mining, feel free to dial in and join in. So that's all for today. Hope to see you again next week, and have a good week ahead. Bye bye.